Hello everyone, a very good morning to all. Welcome to Officers at 247 YouTube channel. One update also from our side, that is if you are preparing for the JAIIB SAB examination. So test series, books, ebooks, video sessions, live lectures, that all things are very helpful in your preparation. And this is this is a only one time investment where you just read all the lectures from experienced faculty. So you only have to just use the code, that is Y422, Y422, and with this code you will get the maximum discount on every JAB and CAP product. Okay, so you can just use the code, that is Y422. So now we are just going to start this lecture with a term, that is annuity. And if I say for exam point of view, this is a very important chapter, or say this is a very important topic for exam point of view. So let's understand what is the annuity actually. Okay, so annuity is nothing but it is known as your series of the payments. Okay, so whenever you just find annuity, that means this is a series of the payment that made at equal interval. Okay, suppose that your just suppose that your installment of, or say your insurance installment is a 5,000 rupees, and that just goes at any particular interval. Okay, and this is a just series of the, suppose that 10 years. Okay, and for every year you have to pay 5,000 rupees at equal interval, right? So this is a case of your annuity. Now we are going to understand what are the different examples of the annuities. uh, for that we understand what is the basic purpose, or say what is the basic need of the annuity, and why we just use the term, that is annuity. So if I say what are the different examples of the annuities, so if I say that your regular deposit, it may be your regular deposit, it may be your monthly home loan. Okay, it may be your monthly home loan, it may be your monthly insurance payment that you have to meet at equal interval of the time. Okay, so it may be any kind of the thing. So annuity, whenever you just find any series of the payment that made at equal interval, that is known as your annuity. Okay, I hope it is now understandable for everyone. So a different type of annuity is there, but we have just broadly classified into two categories, and these are the categories where you will get the questions in the examination. Like first is your ordinary annuity, and another one that is known as the annuity due. Okay, and you will get the questions from these particular annuities. Okay, so now understand what is the ordinary annuity and what is the annuity due. So suppose that this is our payment cycle, and this is our starting period, and this is our ending period. Okay, so payment whenever any payment that made at starting of the period, okay, so that payment is known as for the annuity due. And whenever a payment that made at end of the period, that is known as the your ordinary annuity. This is a very easy to understand. So, okay, so this is our payment period cycle, and whenever it is a question like that payment that made at the starting of the period, or say at the beginning of the period, so where there you have to apply the formula for the annuity due, and where you are just getting for the payment that at the end of the period, so you have to apply the formula for the ordinary annuity, right? Okay, after that we are going to understand what are the formulas we use for the ordinary annuity as well as the annuity due. Okay, so if I say like ordinary annuity, so ordinary annuity, that is your the case when when just payment made at the end of the period. Okay, so you only have to understand that it is the case of the at the end of the period. So this is for at the end of the period, and the formula that we use for the ordinary annuity, that is future value is equal to cash flow multiplied by 1 plus r to the power n minus 1, and it is divided by the r. Okay. Okay. So one more thing here, we have to understand the relationship between the present value and future value. Okay. So what is the relationship between the present value and future value, because from this particular formula you will also get the question in the examination. So future value, the formula for the future value, that is equal to the present value multiplied by the 1 plus r to the power n, where this r denotes the rate of interest and n denotes the number of the period, okay, or say number of the time period, right? So this is a formula where you can also just calculate the present value in terms of the future cash inflows. That future value, it is divided by the 1 plus r to the power n. So these two formulas are very important. What we understand by the future cash inflow and what we understand by the future cash outflow. Anybody knows about that? What we understand by the future cash inflow? Anybody knows about that? What we understand by the present cash flow? Okay, so let me explain. This is a very easiest way to understand, like whenever you are just getting the payment in the future. So when you are just going to receive that future payment, so this is known as a future cash inflow, right? So this is very easy to understand. So if we have to just find out the formula for the present value and the future value, so this is basically the present value, that is equal to future value, and it is divided by the 1 plus r to the power n. All right. Okay. So it is also just understand like the present value of the future cash flows is a method of discounting cash. So whenever you, one more term here that is important, like the term that is discounting. Okay. So whenever you are just calculate the present value in terms of the future cash inflows. Okay, here we are just understanding future value as a future cash inflow. So this process is known as a discounting. Okay, and whenever you are just calculating or say determining the future value, okay, in terms of the present value, so that is known as the process of the compounding. Okay, so that both are important, and we will discuss at the question and answer sessions these all kind of the things. So the important thing that we have to understand here, that future value, the formula for the future value, that is equal to c multiplied by the 1 plus r to the power n minus 1 divided by the r. All right, so where this c denotes your cash inflows. Okay, so right, like suppose that our monthly insurance payment is 5,000 rupees. Okay, so here this cash inflow, just see that will be equal to your 5,000, because this is our cash inflows. Okay, this denotes your cash inflow. So this is your C, this is the value of your C. So now what if we have to calculate the value of the present value? So just memorize this, that is whatever the components you keep in this, in the positive side, just keep that negative, right? Like here this one is negative, so just make this positive, and this 1 plus r to the power n, just make this in negative way, like 1 plus r to the power minus n. Okay, for calculating the present value, and this is a very important thing to understand. So if you just memorize, if you can just memorize the future value of the ordinary annuity, that is equal to cash inflow multiplied by the 1 plus r to the power n minus 1, and it is divided by the r. So this is very obvious to now understand that if you are just calculating for the present value, so the all the positive term you have to just negative that term. So like here, that is 1 is in the negative, so you just make this positive, and 1 plus r to the power n, you just make it negative, and this minus n is very important to understand. Okay, so this is the formula for your ordinary annuity. Now if I say if we have to solve the question for the annuity due, so what the formula of this? So you do not need to so much worry about this. You only have to multiply it by the 1 plus r, and now this formula will become for your annuity due. That's it. So if I say what is the formula for your annuity due, just multiply in the both 1 plus r, and that would be your annuity due formula for the future value as well as annuity due formula for the present value. I hope it is now clear for everyone. Okay, understandable for everyone. So how we can solve these kind of the questions in the examination? Like, only we have to, if we only understand, or say if we only memorize one formula here. Look, in this particular chapter, you have to just understand that present value that equal to the future value, and it is divided by the 1 plus r to the power n. This is the formula, but this is very important from exam point of view. Another formula that is important from exam point of view, that is formula for the future value of the ordinary annuity, and this is the only formula that you have to memorize, because after that you are able to derive another formulas. Okay, so future value that is equal to cash inflow, or say cash flows, and it is multiplied by the 1 plus r to the power n minus 1, and divide by the r. Now for present value, you only have to just convert the figure, like whatever the minus just convert into plus, and whatever the plus just convert into minus. So 1 minus 1 plus r to the power minus n, and it is divided by the r. Okay, and after that, if I say, if you have to calculate the formula for the annuity due, the only thing you have to do, that is uh, like this is our formula. The only thing that you have to do, just multiply it by the 1 plus r, and you will get the formula for the annuity due. I hope it is now clear for everyone. And what is the formula for the annuity due for the present value? So this would be our value, and just multiply by the 1 plus r. So I hope it is now very easiest way to learn, understand. So ordinary annuity, if I say, it is for your at the end of the period, and annuity due, that is the case of your at the starting of the period. Okay, so that is very important thing. All right. Now we are just going to solve questions based on this concept. So the first question, that is Mr. X is to invest 1 lakh by end of each year for 5 years at 5% rate of interest. So how much amount he will receive, right? So look, if I say what here we have to calculate. In this question, Mr. X is investing 1 lakh by end of each year. Okay, so this is a question of your ordinary annuity, right? So it is a question of the ordinary annuity where Mr. X is to invest 1 lakh by end of the each year for the 5 years. So for the first year, this 1 lakh, for the second year, again this 1 lakh, for the third year, this again 1 lakh, for the fourth year, this is again 1 lakh, and for the fifth year, this is again 1 lakh rupees. Okay, and that means, if I say what will be the value of the C, or say cash flows, that would be the 1 lakh rupees, right? Okay. After that, rate of interest which is given 5%, which we can also write as 0.05, and number of the payment, or say number of the period, that is given 5 years. Okay, so here the if I say what the formula we will use, definitely we will use future value. Okay, because present cash inflows just given, like Mr. X is to invest 1 lakh by end of each year. So like every year, so after 5 years, how much amount he will just going to receive. That means you have to just apply the formula for the future value of the cash inflow, and that will equal to the cash inflow, and it will be multiplied by the 1 plus r to the power n minus 1 divided by the r, where this r denotes the number of the payment. Okay, and this c denotes the cash flows, right? So value of the cash flow, that is 1 lakh rupees, and now the rate of interest, which is 0.05 and it is to the power of the 5 minus 1, and it is divided by the your rate of interest, which is again 0.05. So the value which is already given in the question, that is 1.27628, and this value already just provided by the examiner. In the case if just it is not just provided, so how you can just solve this like this like this equation, like 1.05 to the power 5. So how you can just calculate this calculation? So you only have to just, if you this is your calci, you only have to just write 1.05. Okay, after that you have to click on the multiplication sign. This is your first step, like you have to just press the multiplication sign. And second step, if it is the power of the 5, suppose that it is the power of the 5, that means you have to press the equal sign 4 times. Okay. Suppose that it is a power of the 6. So you have to press the equal sign 5 times. Just minus 1 time. Okay. So the first step, that in your calci you have to write 1.05, and after that you have to apply just multiplication. This is the first step. In your calci just write 1.05 and press one time multiplication, and after that if it is to the power 4, it is to the power 5, that means you have to press equal sign 4 times. Okay, so this is a case when examiner just will not provide the value or say calculation value, so you can also just derive by this method. Otherwise this value is already just provided by the examiner. So if I say how you can just solve this question now, this is 1 lakh and this value it is given 1.27628. So we can just write here and minus 1, and it is divided by the 0.05. So what will be the value? Just calculate and tell me what will be the value this. So value, that is 5,52,563, right? So that would be your value. This is a value that you are going to receive after 5 years. Okay, so how much amount that he will receive? The answer, that is 5,52,563, and this is a question where you will get the approximately value, so it doesn't matter. So the only thing matter that how you can solve these kind of the questions in the examination. Now we are going to understand another question. So another question, that Mr. X is to receive 10,000 rupees as interest on bond by end of each year. Again the term, that is end of the each year, that means this is a case of the ordinary annuity, right? This is a case of the ordinary annuity where Mr. X is going to receive 10,000 rupees, 5 years, 5% rate of interest. So calculate the present value of the amount that he is to receive. Okay, so that means Mr. X is going to receive 10,000 rupees, and we have to calculate like 10,000 rupees he is going to receive for the 5 years, and we have to calculate the present value of whatever the amount he is going to receive. So we know that the formula, that is present value. Whenever you are just getting confused between the formulas of the future value and present value, what you have to do, first you have to write the formula for the future value, because if you are just getting confused for that. So now whatever the components we keep in the positive side, we have to just make it negative, and whatever in the negative side, just convert into positive. Okay, so here that is 1 is negative, so just convert into positive, and 1 plus r to the power minus n, and it is divided by the r. Now again the cash inflow, which is if I say what cash flows, that is 10,000 rupees, right? So this would be our cash flows 10,000 rupees, and it is multiplied by the 1 minus 1 plus again rate of interest, which is 5%, which we can also write as a 0.05, and it is to the power of the 5, and again it is divided by the 0.05, right? So now if I say this value is already given in the exam, in this question, like 1.05 to the power minus 5, this is a minus 5, so the value, that is 0.783, and it is divided by the 0.05. Okay, so now just solve this and tell me what will the answer. So this 10,000 multiplied by the 0.217 and it is divided by the 0.05. So tell me what will be the value or what will be the present value of the amount that he is going to receive. Let me calculate this. So this would be 43,400 something, right? So this is the value of the present value. So this is a very important thing we understand about present value, future value of the annuity, right? One more important thing here to understand that if you have to find out the value like 1.05 to the power minus 5, right? This is the value you have to find out. So how you can find that? You can also write this value like 1 divided by 1.05 to the power 5. Okay, so now the only thing that you have to just calculate this 1.05 to the power 5. So like I just explained in the previous slide how you can calculate, like in the calculator you have to write 1.05, and after that you have to, the first step that you have to press the multiplication sign, and in the second step if it is a power of the 5, so you have to press 4 times equal sign. Okay, 4 times equal sign. So if in the question like it is a question of like 1.05 to the power 6, so that means you have to press equal sign 5 times. Okay, just minus 1 time you have to press the equal sign after multiplication, right? So this is we solved, and after just calculating this, just divide like 1 divided by this value and you will get the value of. Okay, so that's all for this session. I hope this lecture is useful for you. And if you're liking our effort, please do not forget to hit the like button on this video. If you have not downloaded the Adda 247 application, just download this and subscribe the Officers Adda 247 YouTube channel so that you can get the notifications of the live sessions as well as the notifications of the live lectures as well as the important news that is related to your examination. Okay, so thanks for watching this video. Thanks for joining me here, and like this video if you're liking our effort, liking our content, and share this video to your friend so that maximum